Based on the provided information for Bitcoin, the strategy will be to take a short position on Bitcoin. This is due to the recent price action showing a decline, coupled with the bearish forecast indicating further downward movement in the coming week. The entry price for this short position will be $97,700. The stop loss will be set at $98,636.58, the resistance level, to minimize potential losses if the price unexpectedly moves against the strategy. The target price for this short position is $91,968.57, the support level, aiming to capitalize on the predicted price decline. This strategy focuses on short-term profit potential, aiming to capitalize on the anticipated bearish momentum in Bitcoin within the next week. Given the provided historical price data and forecast for Bitcoin Cash, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price fluctuations demonstrate volatility, with the price dropping significantly in the past 2 weeks. While the forecast suggests a continued downward trend, the support price at $440.1 provides a potential floor for the price. Therefore, a short position could be considered, aiming to capitalize on the anticipated decline. An entry price around $460, slightly above the current price and the first forecast point, would allow for a small margin of safety. The stop loss could be placed at $470 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $430, aiming to profit from a moderate decline towards the support level. This strategy balances the potential for gains with risk management, acknowledging the inherent volatility of the cryptocurrency market. Based on the provided information about stacks, a cautious investment strategy is recommended. The 2-week price history shows volatility with a recent downward trend. The forecast predicts further declines in the coming week, indicating a bearish outlook. The support price sits at $1.518, suggesting a potential floor for the price, while the resistance at $1.802 presents a significant hurdle for any upward movement. Given this context, a short position appears more suitable. To implement this strategy, an entry price of $1.75 would allow for a reasonable entry point near the resistance level. The stop loss should be set at $1.85 to protect against unexpected price surges. The target price could be set at $1.55, aiming to capture a potential decline towards the support level. This strategy focuses on capitalizing on the anticipated downward movement while minimizing risk through a well-defined stop loss. Remember, the cryptocurrency market is highly volatile, so this strategy should be approached with caution and proper risk management. Based on the provided Ethereum price information, a cautious short-term investment strategy is recommended. The 2-week price change shows a downward trend, and the 1-week forecast indicates further declines. Although the historical prices show some volatility, the current price is near the resistance level of $3,360.54, suggesting potential for further downward movement. Considering this bearish outlook, a short position is advised. An entry price of $3,420 would be suitable, aligning with the recent price action and the forecast. The stop loss should be set at $3,470 to limit potential losses if the price unexpectedly rebounds. The target price can be set at $3,280, which is the lowest point in the recent historical data and aligns with the forecasted decline. This strategy aims to capitalize on the anticipated price decrease while managing risk through a well-defined stop loss. Given the price trends and forecast for Ripple, a medium-term investment strategy appears to be most suitable. The historical prices show a slight upward trend, but the forecast indicates a consolidation period with fluctuations around the $2.40 mark. This suggests a period of sideways movement rather than a strong upward or downward trend. The support price of $1.5351 and resistance price of $2.3385 provide a range within which the price is likely to oscillate. Therefore, a long position would be advisable with an entry price around $2.28, allowing for a margin of safety below the current price. The stop loss should be set at $2.15 to protect against any unexpected price drops. The target price could be set at $2.45, aligning with the upper end of the forecast range and the resistance level. This strategy aims to capitalize on the potential for Ripple to rise within the medium term, while also mitigating risk through a well-defined stop loss. Given the price trends and forecast for Binance Coin, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a recent decline, with the current price hovering near the support level of $612.55. The forecast suggests a continued downward trend, with prices potentially falling to $643 in the coming week. This indicates a bearish outlook in the short term, making a short position potentially more suitable. An aggressive short-term investment strategy could involve entering a short position at $678, the recent high, with a stop loss at $688 to protect against unexpected price surges. The target price could be set at $649, aligning with the predicted low point, allowing for a potential profit of approximately 10%. However, it is important to note that shorting carries inherent risks, and this strategy should be implemented with caution and appropriate risk management measures. Based on the provided information for Stellar, a short-term investment strategy with a bearish outlook appears to be the most prudent approach. The historical price data shows a recent downward trend, and the forecast predicts further declines. While the support price at $0.0938 suggests a potential floor, the current price is relatively close to the resistance level of $0.419. This indicates a potential for further downward movement before finding support. Therefore, an aggressive short-term strategy would involve entering a short position at the current price of around $0.374. The stop loss should be placed at $0.419 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.356, aiming to capitalize on the anticipated price decline. This strategy leverages the bearish sentiment indicated by the price history and forecast, seeking to profit from the potential for further downward movement in Stellar. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $5.214. The forecast suggests Toncoin might continue to decline slightly in the coming week. The resistance level at $6.059 indicates that significant upward movement is unlikely in the near term. Therefore, a short position is advisable to capitalize on the potential for a price decrease. An entry price of $5.45 would be suitable, aligning with the current price and the forecast. The stop loss should be set at $5.60, protecting against any unexpected price recovery. The target price should be $5.15, aiming to capture a portion of the anticipated decline before reaching the support level. This strategy allows for a controlled risk and potential profit in the short term. Given the price trends and forecast for Cardano, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.3579. The resistance is at $1.0558, indicating that there is still some room for upward movement. However, the forecast suggests a continued downward trend, making a short position potentially more profitable in the short term. An aggressive short-term investment strategy would involve entering a short position at $0.968, aligning with the current price and the forecasted price decline. The stop loss should be set at $1, protecting against any unexpected price recovery. The target price should be set at 85 cents, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.3579. This strategy aims to capitalize on the anticipated decline in prices while managing risk with a well-defined stop loss. Based on the provided information for Litecoin, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a fluctuating trend, with recent prices hovering around the support level. The forecast suggests a slight downward movement in the coming week, indicating potential for short-term profit. Considering this, a short position would be advisable. An entry price around $101 would allow for capitalizing on the predicted price decline. A stop loss at $104 would limit potential losses if the price unexpectedly rises. A target price of $99 would provide a reasonable profit margin before reaching the support level. This strategy prioritizes risk management while aiming to capitalize on the short-term bearish outlook. Based on the provided Doge-Coin data, a medium-term investment strategy appears most suitable. The historical price data demonstrates a fluctuating trend with an overall upward bias. Although the recent price has dipped slightly, the forecast suggests a continued upward trajectory over the next week. This indicates a potential opportunity to buy low and sell high within a medium-term timeframe. Therefore, a long position is recommended. An optimal entry price would be around $4.32, slightly below the current price and close to the recent support level. The stop loss should be set at $4.26, below the support price, to minimize potential losses. The target price could be set at $4.69, aligning with the forecast and representing a healthy profit margin. This strategy allows for capitalizing on the expected price increase while managing risk effectively. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on the anticipated price decline. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Aptos could drop from its current price to as low as $8.69, while the support price sits at $8.46 and resistance at $9.80. This indicates a bearish outlook in the short term, making a short position the most suitable strategy. For a cautious short-term investment strategy, an entry price of $9.50 would be ideal, aligning with the current price and providing a margin of safety. The stop loss should be set at $9.80 to protect against any unexpected price recovery. The target price should be set at $8.70, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $8.46. This strategy allows you to participate in the potential price decline while minimizing risk. Given the provided price history and forecast for SE, a cautious investment strategy would be advisable. The historical data shows a fluctuating price trend with a general downward bias over the past 2 weeks. The forecast further suggests a continued downward movement in the coming week. Therefore, a short position on SE appears to be the most suitable strategy at this time. An entry price of $0.473, which is close to the recent low and aligns with the bearish forecast, would be appropriate. The stop loss should be placed at 49 cents, slightly above the entry price to minimize potential losses from an unexpected price reversal. The target price should be set at $0.3513, the support price, aiming to capitalize on the anticipated price decline. This strategy prioritizes risk management and seeks to profit from the prevailing bearish sentiment in the market. Based on the Ethereum Classic price history and forecast, a cautious short-term investment strategy is recommended. The historical prices show a downward trend over the past 2 weeks, with the forecast predicting further declines. The support price at $19.48 indicates a potential floor for the price, while the resistance at $28.40 suggests limited upside potential. Given this outlook, a short position is advisable. A conservative entry price of $27, aligning with the forecast, allows for potential profit as the price moves towards the support level. The stop loss should be set at $28, slightly above the entry price, to minimize risk in case of an unexpected upward move. The target price can be set at $25, anticipating a moderate decline based on the forecast. This strategy aims to capitalize on the anticipated downward price movement while managing risk effectively. Given the price trends and forecast for Polygon, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Polygon could drop from its current price to as low as 46 cents, while the support price sits at $0.4276 and resistance at $0.5673. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a conservative short-term investment strategy, an entry price of $0.517 would be ideal, aligning with the forecasted price. The stop loss should be set at 53 cents to protect against any unexpected price recovery. The target price should be set at 45 cents, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.4276. Based on the provided data for AEVO, a short-term bearish investment strategy appears to be the most suitable. The forecast prices indicate a consistent downward trend over the next week, suggesting a potential decline in the asset's value. The historical price data also reflects this downward momentum, with the price dropping significantly over the past few weeks. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, which is slightly above the predicted low of $0.344. A stop-loss order should be placed at $0.3655, the resistance level, to limit potential losses if the price unexpectedly rises. The target price for this strategy would be $0.3278, the support level, aiming to capitalize on the anticipated price decline. This approach seeks to profit from the short-term bearish trend while managing risk through a well-defined stop-loss order. Based on the provided historical price data and the one-week price forecast for optimism, a short-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a clear downward trend, with the forecast predicting further declines. The forecast suggests optimism could drop from its current level to as low as $1.69, while the support price sits at $1.743 and the resistance at $1.816. This downward trajectory, coupled with the forecast, indicates a bearish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on optimism. A suitable entry price would be around $1.80, aligning with the resistance level and the expected price decline. To manage risk, a stop-loss order should be placed at $1.85, ensuring that potential losses are limited. The target price should be set at $1.70, slightly above the forecast lowest price, allowing for profit-taking before the market potentially reaches the support level. This strategy aims to capitalize on the anticipated price decrease in optimism over the short term. Given the provided price history and forecast for STRK, a short-term bearish investment strategy appears most suitable. The historical price data reveals a downward trend, with the forecast projecting further declines in the coming week. The current price hovers near the resistance level of $0.6212, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, around $0.629. A stop-loss order should be placed at 65 cents, safeguarding against any unexpected upward price movement. The target price for this short position could be set at 49 cents, aligning with the lowest projected price in the forecast. This strategy capitalizes on the anticipated downward price movement while managing risk through a well-defined stop-loss. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a consistent downward trajectory, with the current price close to its forecast and near the support level of $175.03. The resistance is at $216.43, indicating that overcoming this level might be challenging in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $198 would be ideal, aligning with the forecasted price and providing a buffer above the immediate support. The stop-loss should be set at $205 to protect against any unexpected price recovery. The target price should be set at $175, slightly above the support level, allowing you to take profits before the market potentially hits major support. This strategy aims to minimize risk while still capitalizing on the anticipated price decline. Based on the historical price and forecast data for Jupiter, a short-term bearish investment strategy is recommended. The price history demonstrates a consistent downward trend, with recent price fluctuations suggesting continued downward pressure. The forecast prices further reinforce this bearish outlook, predicting a decline in the coming week. This suggests that the market sentiment surrounding Jupiter is currently negative, and investors are anticipating further price drops. Therefore, a short position on Jupiter is advisable. An entry price around $0.876, aligning with the current price and recent lows, would be suitable. The stop loss should be set at $0.927, slightly above the recent high, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.7273, the identified support level, aiming to capture the potential downside movement. This strategy capitalizes on the prevailing bearish sentiment and the predicted price decline, aiming for a short-term profit. Based on the provided price history and forecast for Render, a cautious investment strategy would prioritize a short-term approach. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. This suggests a bearish outlook in the short term. Given these factors, a short position on Render appears to be the most suitable strategy. An entry price of $7.50 would allow for capitalizing on the anticipated price decline. To mitigate risk, a stop loss could be set at $7.90, protecting against unexpected price rallies. The target price should be set at $7, aiming to secure profits before the price potentially reaches the support level. This strategy acknowledges the short-term bearish sentiment while aiming for controlled gains within a defined risk framework. Based on the provided information for Solana name service, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a downward trend, with the forecast indicating further declines. The support price sits at $0.2002, while the resistance is at $0.2484. This suggests a bearish outlook in the short term. Therefore, an aggressive short-term investment strategy would involve opening a short position at the current market price, which is slightly above the forecast price. The stop loss should be set at $0.2484, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.2002, the support level, allowing for potential profit as the price declines. This strategy aims to capitalize on the anticipated price drop while managing risk effectively. Based on the provided historical price data and forecast for Doge-Coin, a short-term bearish strategy appears most suitable. The recent price action shows a downward trend, with the forecast predicting further declines. The current price is hovering near the resistance level of $0.36588, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve entering a short position at 36 cents, aligning with the forecast's initial price. The stop loss should be set at $0.394, the highest point in the recent historical data, to limit potential losses. The target price would be $0.316, the lowest point in the historical data, aiming to capitalize on the anticipated downward momentum. This strategy prioritizes capitalizing on a short-term price decline while mitigating potential risks. Given the provided PEPE price information, a short-term bearish investment strategy appears most suitable. The historical price data shows a downward trend, and the forecast predicts further declines. The support price sits at $0.0000966, while the resistance is at $0.0001827. This indicates a potential for further downward movement in the short term. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price around $0.0001780, aligning with the recent price action, would be appropriate. A stop loss should be placed at $0.0001827, slightly above the current resistance, to limit potential losses. The target price could be set at $0.000000966, aiming to capture the potential downside movement towards the support level. This strategy allows for a short-term profit opportunity based on the current price trends and forecast for PEPE. Based on the provided information for SHIB, a cautious investment strategy would focus on a short to medium-term approach. The 2-week price history shows a fluctuating trend with no clear upward or downward momentum. The forecast prices suggest a potential decline in the coming week, hovering around the support price. Given this outlook, a short position appears more suitable. A conservative entry price could be set at $0.0000225, slightly above the forecasted lowest price. The stop loss should be placed at $0.0000230 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.0000210, aiming to capture a modest profit from the anticipated price dip. This strategy allows for potential gains while mitigating risk by entering at a higher price point and setting a tight stop loss. Given the provided price information for Dog with Hat, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price history reveals a consistent downward trend, with the forecast projecting further declines. The current price hovers near the support level of $1.888, suggesting a potential for a bounce. However, the forecast suggests prices could drop to as low as $1.85, indicating a higher probability of a continued downward movement. Therefore, a short position is recommended to capitalize on this potential decline. A suitable entry price would be $2.07, aligning with the current price and the forecast's projected dip. The stop loss should be set at $2.18 to protect against any unexpected price surges. The target price can be set at $1.92, allowing for a modest profit while still accounting for potential market volatility. This strategy prioritizes risk management and aims to capture short-term gains within a defined timeframe. Based on the provided information about Doge-Coin, the current price trend appears to be bearish. The historical prices show a consistent downward movement, and the forecast predicts further declines. This indicates a short-term bearish outlook for Doge-Coin. Given this trend, a short position would be the most suitable strategy to capitalize on the anticipated price decrease. To execute this strategy effectively, an entry price of $0.00683 could be considered, aligning with the current price and the recent historical lows. A stop loss should be placed at $0.00757 to protect against any unexpected upward price movements. The target price could be set at $0.005673, the support price, aiming to capture a significant portion of the potential price decline. This strategy prioritizes capital preservation by utilizing a stop-loss order while seeking to profit from the anticipated downward trend. Based on the provided price data and forecast for NEAR protocol, a short-term bearish investment strategy appears most suitable. The 2-week price change reveals a downward trend, and the forecast anticipates further declines in the coming week. The support price is at $5.018, acting as a potential floor for the price. Conversely, the resistance price stands at $6.138, suggesting a limited upside potential. Therefore, a short position on NEAR protocol is recommended. An aggressive entry point would be $5.69, aligning with the recent price action and the forecast. A stop loss should be placed at $5.80, mitigating potential losses if the price unexpectedly surges. The target price should be set at $4.90, aiming to capitalize on the anticipated price decline towards the support level. This strategy leverages the short-term bearish outlook and aims to profit from the potential price drop in NEAR protocol. Based on the provided data for Internet Computer, a cautious short-term investment strategy appears most suitable. The historical price data shows a downward trend over the past 2 weeks, and the forecast indicates further declines. Although the support price is at $9.476, the forecast suggests the price may drop below this level. Therefore, an aggressive short position is recommended. The entry price should be set at $10, aligning with the forecast's lowest point. The stop loss should be placed at $10.20 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $9.50, aiming to capture a portion of the anticipated decline. This strategy capitalizes on the bearish sentiment indicated by the price trends and forecast while implementing risk management measures to protect against unexpected price movements. Based on the provided data for Injective, a short-term investment strategy appears to be the most suitable. The price history shows a recent downward trend, with the forecast predicting further declines. The current price is hovering near the resistance level, suggesting a potential for a pullback. Taking advantage of this trend, a short position on Injective would be a viable strategy. An ideal entry price for this short position would be around $24, aligning with the current price and the forecasted decline. A stop loss should be placed at $26, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price would be set at $18, aiming to capitalize on the anticipated price drop towards the support level. This strategy capitalizes on the bearish momentum indicated by the price history and forecast, aiming for a profit within a short time frame. The BTC price history shows a clear downward trend over the past 2 weeks, with the forecast suggesting further declines. Considering the price history, the forecast, and the support and resistance levels, a short-term bearish outlook for BTC emerges. Therefore, an investment strategy focused on shorting BTC appears to be the most suitable approach. To execute this strategy, an entry price of $460 could be considered, aligning with the forecast and allowing for potential profit as the price potentially moves towards the support level. The stop loss should be placed at $475 to limit potential losses if the price unexpectedly rises. The target price could be set at $430, providing a reasonable profit margin while staying below the support level. This strategy aims to capitalize on the anticipated price decline in BTC over the short term. The current price trend for THETA network is downward, with the 2-week price change indicating a decline. The forecast suggests further decreases in the coming week, aligning with the bearish sentiment. Considering the support price at $2.127 and the resistance price at $2.579, the price is likely to stay below the resistance. Therefore, a short-term investment strategy focusing on a short position appears to be the most suitable approach. To execute this strategy, we can enter a short position at the current price of approximately $2.15. The stop-loss order should be set at $2.25 to limit potential losses if the price unexpectedly rises. The target price can be set at $2.05, anticipating a further decline in price. This strategy aims to capitalize on the anticipated downward movement of THETA network within a short time frame. Based on the provided information for WorldCoin, a short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a downward trend, with the forecast indicating further declines. The current price is relatively close to the support price, suggesting that a further drop is likely. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, with a stop-loss set slightly above the current price to minimize risk. The target price should be set at the support price, allowing for a potential profit from the anticipated decline. This strategy capitalizes on the bearish momentum observed in the recent price history and the forecast, aiming to profit from the expected price drop towards the support level. Given the provided price history and forecast for Hooked Protocol, a short-term investment strategy appears most suitable. The historical price data shows a downward trend, with the forecast projecting further declines. The current price is relatively close to the support price of $0.3483, suggesting a potential for a bounce, but the forecast indicates that this bounce might be short-lived. Therefore, an aggressive short-term strategy could involve entering a short position at the current price of $0.408. A stop-loss order should be placed at $0.418 to limit potential losses if the price unexpectedly rises. The target price could be set at $0.396, aiming to capture a profit before the price potentially reaches the support level. This strategy capitalizes on the bearish sentiment indicated by the price history and forecast while managing risk through a well-defined stop-loss order. Based on the provided price data and forecast for Artificial Superintelligence Alliance, a bearish investment strategy is recommended for the short term. The historical price shows a consistent downward trend, and the forecast predicts further declines. The current price is hovering near the resistance level of $1.364, suggesting a potential for a pullback. A short position would be advisable to capitalize on this anticipated decline. An entry price of $1.35 could be considered, with a stop-loss placed at $1.38 to limit potential losses. The target price could be set at $1.25, aiming to profit from the predicted decline towards the support level. This strategy leverages the current market sentiment and the forecast to potentially generate short-term returns. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $4.199. The resistance is at $8.499, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $7.71 would be ideal, aligning with the forecasted price. The stop loss should be set at $8 to protect against any unexpected price recovery. The target price should be set at $6.50, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $4.199. Based on the provided Filecoin price information, a short-term bearish investment strategy appears to be most suitable. The 2-week price change shows a downward trend, and the 1-week forecast predicts further declines. The historical price data reveals a consistent downward movement, with the price hovering close to its support level. This suggests that Filecoin is currently vulnerable to further price drops. Therefore, a short position would be advisable. An entry price of $5.25 aligns with the forecast's lowest point and allows for capturing potential downward momentum. The stop loss should be set at $5.45 to minimize risk in case of an unexpected upward price surge. The target price could be set at $4.80, aiming to profit from the predicted decline while staying above the support level. This strategy capitalizes on the current bearish sentiment and aims to generate returns from Filecoin's anticipated price decrease in the short term. Given the provided price history and forecast for Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a fluctuating trend with periods of both upward and downward movement. While the forecast suggests a continued decline in the short term, the support price at $0.1398 provides a potential floor for the price. Therefore, a long position could be considered with a strategic entry point around $0.150, slightly above the current price and below the resistance level. This entry point allows for potential upside if the price rebounds, while the stop loss could be set at $0.140 to limit downside risk. The target price could be set at $0.170, aiming to capitalize on a moderate price increase towards the resistance level. This medium-term approach allows for potential profit while managing risk in a volatile market. The provided data suggests a slightly bearish outlook for Ethereum name service in the short term. While the historical price shows some volatility, the recent downward trend and the forecast indicating a decline towards the end of the period point towards a potential dip. Considering this, an investment strategy focused on a short position appears more suitable. A conservative approach would involve entering a short position at the current price of $34. The stop loss should be placed slightly above the recent high of $43 to minimize the risk of a sudden price reversal. The target price could be set at $30, allowing for a reasonable profit margin while aligning with the predicted downward trend. This strategy prioritizes risk management and aims to capitalize on the anticipated price decline in the short term. Given the historical price data and the avalanche price forecast, a short-term bearish investment strategy appears to be the most suitable approach. The historical prices show a clear downward trend over the past 2 weeks, with the forecast predicting further declines. Although the support price is relatively high at $26.22, the resistance level of $43.74 is a significant barrier to any potential upward price movement. This suggests that Avalanche is more likely to continue its downward trajectory in the short term. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, which is close to the predicted price of $39. A stop-loss order should be placed at $40 to limit potential losses if the price unexpectedly rises. The target price for this trade would be $36, aiming to capitalize on the anticipated decline towards the support level. This strategy prioritizes capitalizing on the short-term price movement and seeks to profit from the bearish outlook for Avalanche. Based on the provided VeChain price data, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a fluctuating trend, with recent dips suggesting a potential downward movement. The forecast price also indicates a continued decline over the next week. Considering these factors, a short position on VeChain seems promising. An ideal entry price for this strategy would be around $0.0504, aligning with the recent price dip. A stop-loss should be set at $0.0568, slightly above the recent high, to limit potential losses. The target price could be set at $0.0453, the lowest price point in the provided history, allowing for a reasonable profit margin. This strategy capitalizes on the anticipated short-term decline in VeChain price, aiming to generate returns within a relatively short timeframe. Based on the provided price information for PENDLE, a cautious investment strategy focusing on the short term appears most suitable. The 2-week price change shows a mixed trend, with recent declines suggesting potential weakness. The forecast also indicates further price drops in the coming week, aligning with the bearish sentiment. The support price at $4.837 acts as a potential floor, while the resistance at $5.446 suggests limited upside potential. Considering these factors, a short position is recommended. An entry price around $5.20 would allow for capitalizing on the anticipated downward movement. The stop-loss should be set at $5.40 to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $4.90, aiming to capture a decent profit before the price potentially reaches the support level. This strategy prioritizes risk management while aiming to capitalize on the perceived short-term bearish trend in PENDLE. Based on the provided The Sandbox price data, a cautious investment strategy with a medium-term perspective appears most suitable. The recent price history reveals a fluctuating trend with a slight downward bias. While the forecast suggests a continued decline in the coming week, reaching a support level around $0.609, the historical data also indicates potential for recovery. Therefore, a long position is recommended with an entry price around $0.634, slightly above the current price and below the forecast low. This allows for some room for price movement before entering the position. The stop-loss should be set at $0.615 to limit potential losses if the price drops further. The target price is set at $0.735, aligning with the recent historical high and representing a reasonable upside potential. This medium-term approach aims to capitalize on potential price rebounds while mitigating risk through a well-defined stop-loss. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests Decentraland could drop from its current price to as low as $0.505, while the support price sits at $0.4683 and resistance at $0.6026. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.575 would be ideal, aligning with the recent price action and the forecasted price. The stop loss should be set at $0.6026 to protect against any unexpected price recovery. The target price should be set at $0.473, slightly above the support level, allowing you to take profits before the market hits major support at $0.4683. This strategy aims to profit from the anticipated downward movement in Decentraland prices in the short term. Given the price trends and forecast for ENG Coin, a short-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a downward trend, and the forecast suggests further declines in the coming week. The support price at $0.1333 indicates a potential floor for the price, while the resistance at $0.2926 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $0.275, aligned with the recent price action, would be appropriate. The stop loss should be set at $0.293, slightly above the recent high, to minimize risk. The target price should be $0.248, slightly below the forecasted lowest price, allowing for potential profits before reaching the support level. This strategy aims to take advantage of the short-term bearish momentum in ENG Coin. Based on the provided information for Uniswap, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a slight downward trend, with the price oscillating around the $13 to $16 range. The forecast indicates a further decline, with prices potentially reaching $14. This suggests a bearish outlook in the near term. Therefore, a short position on Uniswap is recommended. An entry price of $15.50 would allow you to capitalize on the anticipated price drop. Setting a stop-loss order at $16 would help mitigate potential losses if the price unexpectedly rises. The target price should be set at $13.50, aiming to profit from the predicted decline while avoiding excessive risk. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The support price is at $10.82, and the resistance is at $27.79. This suggests a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $23 would be suitable, aligning with the current price and the downward trend. The stop loss should be set at $24 to protect against any unexpected price recovery. The target price should be set at $20, slightly above the support price, allowing you to take profits before the market potentially hits major support. Given the price trends and forecast for Aave, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a volatile pattern with both upward and downward movements. However, the recent 2-week price change shows a slight downward trend, while the forecast suggests a potential recovery in the coming week. This indicates a period of consolidation before a potential upward move. Therefore, an investment strategy for Aave should involve a long position. A suitable entry price would be around $320, aligning with the current price and the support level of $298.20. The stop loss should be placed at $310 to minimize potential losses if the price declines further. The target price could be set at $350, aiming to capitalize on the forecast's upward trajectory and the resistance level of $361.65. This strategy allows for a medium-term hold, capturing potential gains as Aave recovers and potentially surpasses its recent highs. Based on the provided EOS price data and forecast, a cautious short-term investment strategy appears most suitable. The historical prices show a recent downward trend, with the forecast predicting further declines. The price is currently near the support level of $0.4245, suggesting a potential bounce. However, the forecast indicates a continued downward trajectory, making a short position potentially profitable. Therefore, a short-term investment strategy could involve entering a short position at the current price of 84 cents. A stop-loss order should be placed at $0.889, slightly above the highest forecast price, to limit potential losses. The target price could be set at 79 cents, aligning with a potential support level and allowing for a reasonable profit margin. This strategy capitalizes on the bearish sentiment indicated by the price history and forecast, while mitigating risk through a tight stop-loss order. Given the Tron price history and forecast, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a volatile trend with recent fluctuations. While the forecast suggests a potential decline in the coming week, the support price at $0.2119 provides a crucial floor, indicating a potential for a rebound. Therefore, a long position is recommended with an entry price around $0.250. This allows for a potential upside if the price rebounds towards the resistance level of $0.2796. A stop-loss order should be placed at $0.244, below the recent lows, to limit potential losses. The target price could be set at $0.270, aiming for a moderate profit within a medium-term timeframe. This strategy balances risk and reward, capitalizing on potential upside while mitigating potential losses. Given the current price trend and forecast for Suncoin, a short-term bearish strategy appears most suitable. The 2-week price change shows a downward trend, with the forecast indicating further declines. While the price hovers near its support level, the resistance is relatively far away, suggesting limited upward potential. Therefore, a short position is recommended, aiming to capitalize on the anticipated price drop. An entry price around $0.022 could be considered, aligning with the forecasted price movement. To manage risk, a stop-loss should be placed at $0.0235, slightly above the current price and the immediate resistance level. The target price could be set at $0.0206, aligning with the support level and potentially capturing a significant portion of the anticipated decline. This strategy prioritizes capital preservation while seeking to profit from the short-term bearish outlook for Suncoin.